Now, if you want to snap up some shares of Facebook, even though the company's not listed, you can now, thanks to new outfits that allow investors to buy stock in private companies. Markets reporter Sheila Dharmarajan is here on the set to explain. Sheila, how do you do this?
Well, the bottom line is that private shareholders now don't have to wait anymore for an IPO or takeover to sell their shares. There's a host of companies out there, SecondMarket, Exchange, that have created marketplaces where buyers can actually buy shares in these hot companies and sellers can actually sell their shares. And it sounds like a win-win for everyone here, but I did talk to a lot of Silicon Valley insiders, and there is some healthy skepticism around this concept. In fact, one partner told me it's a completely speculative market, and a whole lot of people are going to lose a whole lot of money. So a couple of red flags I want to point out to you here. The one thing is this a dumping ground for bad companies? If you don't think your company's ever going to go public, if you don't think it's ever going to get bought out, why not just start selling your shares? So insiders think that it has the potential to attract a lot of lemons. And the other point is it's a lot easier to sell a lemon when you don't have to give a lot of information about it.
Sure.
Private companies don't have a lot of regulation, so you don't have to reveal information, you don't have to list a lot of information about the company. So thin information that investors are trading on here.
Disclosure.
Disclosure.
Okay, say you're an investor willing to take on risk. How does this all work?
Well, it's a controlled marketplace, so it's not like the NASDAQ where you can go 24/7 and start day trading. Sellers do have to be accredited at some point, or they have to pass some approvals. And buyers, they have to get company approval as well. And it's interesting because, you bid online and you can sell online, but the actual transaction is then consummated offline. And, whether you're buying or selling shares, it always comes down to valuation. So how do you value private share companies? Well, I talked to Barry Silbert, he's the CEO of SecondMarket, and he said that like any other market, generally the market does, make its price. But, funding, valuation of VC funding for these companies often are a barometer for valuation. And it's interesting because it's not a regular market, companies actually have a say in valuation guidelines as well.
So why do companies want to participate? What's the upside for them?
Well, market conditions have been a lot tougher these days, so it's taking a lot longer for companies to go public. Talks about M&A have taken a lot longer. So a lot of companies view this as a great employee benefit. Allow your employees to get some liquidity ahead of time, keep them motivated, keep them working to build a company. So they think it's a very good motivator for employees. So some interesting concepts out there.